Ethereum price today is $721.17 with a 24-hour trading volume of $11 billion. Ethereum is down 55% in the last 24 hours. The current CoinMarketCap ranking is 2, with a live market cap of $325 billion. It has a circulating supply of 119 million ETH coins, and 200 million TH max supply. According to our current Ethereum price prediction, the value of Ethereum will drop by -0.51% and reach $2,712.74 by February 26, 2022. According to our technical indicators, the current sentiment is bearish, while the fear and greed index is showing extreme fear. Ethereum recorded 53% green days with 9.16% price volatility over the last 30 days. Based on our Ethereum forecast, it's now a bad time to buy Ethereum. Based on today's classical pivot point with the value of 2,666.93, Ethereum has support levels of $2,561.58, $2,486.11, and the strongest at $2,380.76. Similarly, Ethereum resistance levels are at $2,742.40, $2,847.75, and $2,923.22. To get a better idea of what could happen to the Ethereum price in the future, it's helpful to also explore Ethereum's price history. In the last month, the ETH USD pair is down -3.37%. The one-year performance of ETH USD is 45.52%. The bulls failed to push through this hurdle, resulting in a more than 10% correction both times. This move pushed Ethereum price into the daily demand zone, extending from $3,188 to $3,393. This area is crucial, and ETH is more than likely to witness some sort of a bullish reaction. From a conservative standpoint, Ethereum price might set up a lower high, around the 50-day simple moving average SMA at $2,997. In some cases, the move could extend to retest the lower limit of the supply zone at $3,188. On the other hand, a massively bullish outlook would require ETH to slice through the supply zone's upper limit at $3,393 and make a run for the convergence point of the 200-day and 100-day SMAs at roughly $3,600. Regardless of the bullish outlook, if Ethereum price produces a daily candlestick close below $2,608, it will invalidate the short-term bullish thesis. In such a case, investors need not fret as there is another support area, ranging from $2,525 to $2,324. Therefore, bulls have a barrage of support levels and areas to help recover losses and give the uptrend another go. Ethereum initially tried to rally during the trading session on Friday but turned around to show signs of weakness. By doing so, it confirms the M pattern that I had been talking about during the previous session. Because of this, it looks like we are ready to break down a bit, and it is more likely than not that we are going to continue reaching towards the $2,600 level. After that, the $2,500 level could very well be targeted, an area that has been support in previous attempts. The 200-day EMA sits above the most recent drop, and the 50-day EMA is getting ready to break down below there to form the so-called death cross. Ultimately, that is a longer-term negative signal, but it is obviously a late one. If you are waiting for that signal to short the market, or even get out of it, that is roughly $2,000 too late. That being said, people will pay attention to it and it will probably get a few headlines here and there. One of the biggest problems that Ethereum is going to have is the fact that it is a risk asset, and quite frankly risk assets have been getting hammered as of late. The markets continue to be very noisy, and therefore I think is probably only a matter of time before volatility shakes more people out. I would not be surprised at all to see this market go looking towards the $2,000 level, as we are seeing tightening monetary policy, and that of course attracts quite a bit of concern when it comes to being far out on the risk curve like we have right now. If we were to break down below the $2,000 level, then we could break down rather nastily. On the other hand, if we were to turn around or break out above the 50-day EMA, then it is likely that the market could go looking towards the $3,500 level. After that, we could see this market looking towards the $4,000 level. Nonetheless, I do think that we have further to go to the downside, and as I like Ethereum for the longer term, I hope we get a crypto winter so I can start piling money into this market for the next move higher. Ethereum Classic achieves a low-risk analysis based on investors' observer research. The proprietary system gauges how much a coin can be manipulated by analyzing much money it took to shift its price over the last 24-hour period, along with analysis of recent changes in volume and market cap. The gauge is between 0 and 100, with lower scores equating to higher risk, while higher values represent lower risk. For investors who bought Ether in recent months, watching the Ethereum price spiral lower is unlikely to be perceived as a good thing.